Hi everyone, I'm Emma Everett, Client Advice Manager and Chair of the Residential Investment Committee at Momentum Wealth. Last week, I spoke with Damien Collins, our Managing Director, to talk about COVID-19 and its wider effect on the Perth residential property market. This week, I'm joined by our Finance Team Leader, Kayla Merrick, to talk about some of the initiatives that have come out in the industry to support investors and borrowers and how we're seeing them flow through in the market. Thank you for joining me, Kayla.
No worries, Emma. Thanks.
Now, Callum, it's certainly been a rapidly evolving situation as a number of initiatives have come into the marketplace. We've seen at least 90 billion being lent into the banking industry to encourage lending to businesses and to help stimulate the economy. We've seen a number of lenders announcing mortgage relief packages for households and businesses. And of course, we saw the second emergency rate cut by the Reserve Bank of Australia in late March. So from what you're seeing on the ground, what's been the response from lenders? Are they passing on these rate cuts?
Yeah, so we've had two rate cuts this year. As you mentioned, the first one early March. Now, majority of lenders have actually passed on the full 0.25% onto their borrowers. So that's a lot of borrowers will have noticed that it has come into effect in the last couple of weeks. The emergency one, the second rate cut, lenders are taking a bit of a different approach this time with obviously everything that's going on. I guess what they're doing is looking at trying to benefit as much of their clients as possible. So we've seen a lot of lenders announce that they're heavily reducing some of their small business loans, interest rates and overdraft rates there to help those clients. We've seen significant reductions to fixed rates also. We're actually getting in the low 2% for 1, 2 and 3 year fixed for a lot of our clients at the moment. We've also seen them try to help out those with term deposits. So normally when rates start getting cut, those people are affected because their interest earning account rates go down and they don't receive as much money each month there. So we've seen some lenders try and help out by increasing some of the 12-month term deposit rates. So I guess, yeah, there's been a bit of a different approach to what we're used to. And I think it's from coming from trying to help as much clients as possible.
Absolutely. So for those existing investors who are concerned about potentially falling into financial difficulties through this time, what's your advice and how are you and the team working with them to strengthen their financial position?
Yeah, so I guess first step that I would give in terms of advice would be to reach out to your broker or engage a broker if you don't have one already. What we're doing with our clients at the moment, for example, is we're offering complimentary reviews across the board. So I guess we want to make sure that that people are best set up as they can in such uncertain times for as long as possible. So some of the examples of what we're doing in our reviews is we're helping negotiate better rates with their existing lenders. We're identifying if they've got offset accounts available and set up redraw facilities that they can access some emergency buffer accounts to help get through if they have a reduction in cash flow. And if the lender's not willing to negotiate or they're offering the best they can and there's a better deal elsewhere, then we're doing a lot of refinances to help put clients in better positions and help them save money moving forward. I guess the second point to that is if those options aren't available and you really are starting to find that making mortgage repayments and meeting your liabilities is a real struggle, banks have always had the financial hardship assistance available, and now more than ever, they're there to help. So don't be afraid to reach out to your lender. Don't just let it go into arrears. Reach out to your lender and find out what's available there. The other thing a lot of people would have seen was the announcement from a lot of the lenders about the 6-month deferral for loan repayments. So essentially what that means is clients are able to put their loan on hold for 6 months. Now, I guess the point I want to make with this is it's not a write-off, it is a deferral. So I guess the lender's not just going to forget the repayments in 6 months and we'll all be good at the end of it. The interest will get calculated still and it will actually get capitalized to your loan. So you'll see an increase to your loan balance at the end of the 6 months. And in a lot of cases, what that might result in is a larger monthly repayment. Now, every lender is different as well, I'll point out with this. So each lender's got a different approach to what they'll do, how they'll calculate it, and who's actually eligible for it. So I jumped online, I Googled a few of the lenders that we use quite regularly and went to their home banking page, and there's big COVID-19 banners that are in your face. So There's a lot of information about what each specific lender is doing for their clients and how to apply for these loan deferral processes. So if you're unsure, find out what is actually eligible to you, and by all means reach out to your broker and discuss those options, and they'll help advise what the next steps should be.
Absolutely. I guess like with all these initiatives, the devil is always in the detail. So it sounds like there's quite a bit to work out. I suppose that we've always noticed that if people seek advice early, it just puts them in such a better position rather than leaving it until the 11th hour as well.
Yeah.
And so, we've talked about existing investors, but I know we've had a number of questions from people who had been preparing to enter the market to buy their next home or an investment property, and now they're wondering whether they should put all their finance approval plans on hold. What would your advice be to those buyers?
Yeah, look, by all means, it's very uncertain times at the moment. So yeah, a lot of people will put those purchasing plans on hold, and for very good reason. But I guess some of the advice we're giving to our clients, a lot of them are in stable positions with their employment, their income secure. They're not too concerned about that fact. So I guess what we are seeing at ground level is the turnaround times for the lenders processing loan applications. That's already starting to blow out to a couple of weeks in some circumstances. And lenders, all the lenders, the big banks, they're not immune to this as well. Their call centers, their big buildings where all the loan processors were working from, they've all had to work remote as well. So that's slowing down the whole process. And I guess once we get through this, and we will, it's just a matter of how long it's going to take. We need to, I guess you've got to be mindful of the fact that a lot of people will put their plans to purchase on hold at the moment. So we'll see naturally a big flood of people ready to go once the light shines at the end of the tunnel. That's going to put a big strain on the lenders who will already be struggling with processing loan applications. So with a pre-approval, if you're solid right now with your employment and financial situation, I'd recommend go ahead with it. You're not required to take that loan out. Once you get the pre-approval, it can sit there, and then at least when things return to normality, hopefully soon, you're in a better position to take advantage compared to all those people who have put it on hold and are struggling to get a bank to look at their application.
Absolutely. And what we're hearing from a number of buyers is that, if their employment and their financial situation is stable, they're open to taking advantage of good deals that become available during this time. We're certainly not seeing widespread discounting because a lot of sellers are putting their plans on hold, much like buyers are. But having that finance pre-approval in place, having that certainty around what you can borrow and at what terms, makes it possible to take advantage and to buy in a market with less competition and with a strong offer that the seller can see is a stable and a good offer to take.
Definitely.
So thanks for joining me, Caleb, and sharing those insights. If you haven't been in touch with a broker, or if you have questions about some of the fine print you're seeing on your lender's website, you're not sure what to make of it all, don't be shy. Do get in touch with us. We're here to help. You can visit us at momentumwealth.com.au. We'll be sharing these video insights weekly as different initiatives and different market updates become available, letting you know what all these events mean for your property portfolio. So to stay up to date, you can visit our dedicated website, momentumwealth.com.au/coronavirus, or give us a call. We'd love to help.